A lot of traders are going to tell you when you should be taking trades, what strategies you should use, where to take entries, everything like that. But what a lot of traders don't show you is where you should be staying out of trades at specific times of the day and how to identify that. So I'm going to show you right now. This is the 2000 tick ES chart. It's the S&P 500 futures chart. But whatever you trade, you need to understand your time frame. So I'm trading the 2000 tick chart. But if you were trading a 5-minute chart or a 1-minute chart or some other asset like NQ or crude oil, just look at the chart within its context. So I'm just going to demonstrate it here. Now, on a day like this, you have all these candles moving down. There's a lot of different space. But one thing that happens from time to time is you can get what I call areas of congestion. Now, some people call this consolidation, but congestion's a little different. Congestion is when you have a zone that looks like this. There's not a lot of space in between the high and the low of this zone. If I measure this here, you'll notice there's only about 2.25 points there. So there's really only about 2 points between the highs and the lows. It's not really enough room to take a trade because if you enter near the middle, you don't have enough room to get out before the highs. So there's just really no way to enter. Even with a bullish signal bar like this one, you don't want to enter there because you don't have enough room to the highs. Now, sure, that one works, but hindsight's always 20/20. And so you'll see these areas a lot. Now, a lot of times in areas like this, when it breaks out, it fails and breaks back in. And you can see that right there. Completely failed right back in. But here's the thing. When you have these areas where you start to identify a few candlesticks stacking sideways like this, when you have like about 3 candlesticks that are stacking sideways and they start to look a little bit like dojis, that is congestion. And these are areas where it is best to not take a trade. Now you can take a trade in them, but you lower the probability of success because a lot of times congestion is a micro range. And what do we know about ranges? If they bounce between the highs and the lows, and a lot of times the breakouts will fail even if they only fail temporarily. That's just standard. Even here, when this one broke out the top, it failed. When it broke out the bottom, it temporarily failed. Back to here, failed back in temporarily, then it finally went through. And even after it went through, it still came all the way back to test the range area before it finally went lower. But you can see when you get these little areas of congestion, you want to avoid taking trades in these zones because what'll happen is you'll get stuck sideways in a position and have to sit through it, and it will be 50-50 of whether or not it's going to go to your target or go against you. And you can find these on pretty much every chart. So I'm just picking a random day here, and you can see here's like an example where we're starting to stack sideways. When you start stacking sideways like this, you want to be careful. And one thing that helps me is if I draw a little micro range like this, it helps me see that we're stacking sideways here. And sure, we made a higher high and a higher low, and there's some movement there. But overall, this particular move is very sideways, and it's congested. And you can find these on any chart, any time frame. So when you start identifying your strategy, and then you notice before you're about to get in that you have 3 bars like this stacked sideways, then you can avoid taking the trade. It can become a checklist item for you as you're looking at taking trades. Am I in an area of congestion? A lot of the mistakes that new traders make is they don't avoid trading in these zones. And you can find them all the time on charts. Like here's another one. You don't want to enter a trade in here. When you see these bars stacked sideways like this, and then you get this doji on the 4th bar, you have enough information there to know we're probably in congestion. And you can see it takes a little bit of time before it works its way through. And even as it breaks out, it fails, and it breaks back in, fails, and finally it goes lower. So you need to be careful in these zones of congestion because they will cause you to wreck your account very quickly. And just keep in mind that you need to have enough room between support and resistance if you're trading in there. If you are trading inside of a range, it's okay to take a long off the lows if you have room to the highs. Just like it's okay to take a short off the highs if you have room to the lows and you get a setup that fits your criteria. But you have to be careful in these spots. And I can just zoom into any random day and I'm sure I can find zones of congestion. So let's pick another random day just to illustrate this. So here's a day that had a bunch of trends. Even on a trending day, you get these spots where you just really have to be careful. You can see here a zone of congestion. You can see one here. I don't even have to draw it, but you can just see when you start stacking sideways, there's really no trade setups in there. There's not enough room between the highs and the lows. It's just an area of congestion. Now, it is good when you get an actual range that has some better highs and lows that you can trade, but that was not what I was showing you there. Like a better range would be when you can draw from the high to the low. This is just a random day, so I don't know if this was the actual range, but something like this where you actually have some room between the highs and the lows. That might not be the best example, but it's just an example. That's not congestion because you actually have room between the highs and the lows to take trades. When it's super tight and there's no space in between, that's congestion. Stay out of trades with congestion and you'll improve your trading quite a bit.